Hi everyone, welcome to financialexpress.com special budget series. Demonetization plus GST. It's been a year full of turmoil for the Indian economy, but GDP growth has picked up in the last quarter. To better understand what the government needs to do to make sure that India takes the super leap on the high growth path, we have with us Ranen Banerjee. He's leader public finance and economics at PwC. Hello sir.
Hello.
Sir, what is it that the government needs to do in its last full budget so that we are able to take that nice leap onto the GDP growth path?
I think the most important thing that the government needs to look at in the last year is not to fritter away the resources which are scarce on populist measures and focus more on the infrastructure elements, or as in the urban as well as on the rural segments, because it has a two-way effect. One is that it has a multiplier effect, and as we all know, infrastructure sector is something which is job inducing too.
Okay, but we are in the middle of an agricultural distress situation in most parts of India, and you yourself said the government should be prudent on the fiscal side, but your fiscal deficit target is strained, and with growth not really picking up as much as expected, there is also a call for fiscal stimulus with private sector spending not picking up as much. So where do you think the government should focus on? I mean, what does it do to smartly alleviate the agricultural distress and not compromise on the fisc?
So essentially, whenever we talk about agricultural sector support from the budget, we always focus on aspects like the minimum support price or the farm loan waivers. These are the only two things that we hear about. But there are other ways to address the farm sector. One is that there can be again an infrastructure investments in the farm sector itself.
Right.
If the cold chains are put in place, if the rural connectivity is improved, then the farmers in any way, if they are connected better to the market, then they are able to realize higher prices, and we don't need to give the MSP raises. We know that the MSP raises does not always trickle down to the farmers, and it is also inflationary. So when we artificially set a price, then it feeds into the inflation also. So if we look at, and even if we have to do a minimum support price, because we understand that the farmers have to be supported, then we have to find ways of managing the procurement efficiently and making that the goods procured or the farm produce procured reach the market in an efficient manner, where again there is no enhancement in price at the selling price from the MSPs that are being given. Now, if we manage that inflation side better, we possibly would have some room on the interest rate side, because if we have seen that the inflation numbers that have come in the past also, it is being impacted mostly by the food items. So if we are able to manage the inflation on these items, then I believe that there could be headroom on the interest rate side, and if that happens, then we can stimulate the private sector investments also. Now, we know, as you rightly mentioned, Smriti, that private sector investments have not picked up, and we are not seeing any signs of it. But then the government has to provide a stimulus. There's no way of it not providing a stimulus. The only silver lining I would say is that we are starting from a not very, but a lower GDP base. Now, we expect that the GDP as a percentage growth, we expect it to be more. One is because of the base effect, right, that we are starting on a lower base, and also because the effects or the slowdown in some of the sectors we may have seen because of the demonetization as well as GST, the initial teething things. So these are expected to wear off more in the next financial year. So if that happens, and if we are going to have a higher GDP growth, then the headroom for the government to spend as a percentage of GDP also goes up.
Right.
Because if the GDP goes up, your fiscal deficit as a percentage of GDP, even if the expense is more, the percentage is met.
Right.
So we may have an additional headroom from that perspective.
So you think that the government will be able to step up its spending on the right kind of projects without compromising on the fiscal deficit target?
Yes, it is quite possible, because there are, if you look at the government budgets, almost I would say 60 to 65% or even slightly more than that is are kind of committed expenses. Right. They are salaries, pensions and the interest servicing. Right. So the debt servicing. So if we leave that out, because we don't have much flexibility on that, we are left with around 30-35% of the budget, which is kind of a discretionary spend for the government. Now, out of that, the discretionary spend on the revenue items is something which we need to look at, and if we can shift some of those into capital expenditure items, right, where they are directed towards more infrastructure investments, etc. So that is something which we need to look at.
Okay. One thing that I derived from your answer is that last year the government actually shifted its budget from 28th February traditionally to 1st February. Has that really helped government allocate its expenditures in a better way? Yeah, so that's
actually a very good point you raised, and we have been hearing a lot about this fiscal deficit reaching 92%, 98%, right, 95% of the monthly, right, target, and we are looking at month to month. Now we have to look at it from a perspective that when the budget used to be done in March, and the allocations to the various ministries and the states and the departments, they used to happen around June.
Right.
So the first quarter was like a business as usual.
Right.
Second quarter was the rainy season, and the third and the fourth quarter is when all the expenditure used to get jumbled up, and you used to see a spike in the last quarter. Now what has happened with the shifting of the budget date is that the allocations were available to the ministries and the departments on 1st of April. So we got an additional quarter of spending. So when we say that we have already consumed an X percentage of fiscal deficit, that we are looking at it from a previous scenario where we expect a bump to happen in March. But this year, the bump in expenditure in March is not going to be that significant, given that the first quarter allocations were available with the ministries. Right. And that is the reason why we are probably a little ahead on the fiscal deficit, I would say consuming the fiscal deficit percentage, right, in the first 6 months.
Comparing it to last year's pattern.
Yes.
But that doesn't hold true. The other thing that you mentioned is that as the effects of GST demonetization wear off, and if you get better revenue collection, then the overall percentage to GDP would make a difference. But what is your expectation of the GST revenue collection going forward in the next 1.5 years as the process gets more streamlined and more firms get absorbed in the GST? Yeah.
So clearly GST is something which is going to expand the tax base,
right,
for sure.
Right.
Now as the tax base increases, and it is and it is a gradual process, like supposing I as a taxpayer go and register and file my taxes, I actually kind of incentivize or make it mandatory for 4 or 5 more of my suppliers who are supplying to me or my consumers to also get registered to avail the tax benefits. So it has a kind of a multiplier effect on the tax base increase. So we are going to experience a significant enhancement of the tax base, and with the initial things that government has done in simplifying the processes as well as rationalization of rates, and the government has indicated that it may look at further rationalization of rates as well as inclusion of other items into the GST, right, specifically petroleum, right, products and even real estate. So when everything comes into the GST ambit and we have more and more registrations, the tax base is going to increase. And with this increase in tax base, it is not only when we talk about this fiscal deficit, we are talking about the central government level. Now if you take the combined fiscal deficit of the states and the center, then that is also an issue, and we have a very large number on that. Now center is supposed to provide revenue share to the states and provide fiscal support to the states to take care through the finance commission mechanism. Now given that under the GST regime they already are sharing the service tax as well as the the goods, the taxes on goods. Earlier, the service tax used to be in the central pool.
Right.
Now it is already shared. So, whether there was an effort or not on the part of the states to enforce that, it was being done centrally and it was collected. So, the service tax basket is going to grow significantly, which earlier was not the case that much, because it was only a central government led effort. So, the incremental revenues that will come from the GST, because of expansion of the tax base as well as efficiencies and better enforcement, are going to be quite large, and we may not realize all of it in the next financial year, but certainly some bit of it would be realized. So, we would have a headroom from the revenue side, one, and of course, and it also rubs off on the direct taxes side also,
right.
Because you have a better compliance on the GST, then you have a consequent better compliance on the direct taxes also, the income taxes, and so we'll also have better realization on the direct taxes. So, the government is expected to have a better headroom from a revenue perspective,
right.
And that is something the government should use to provide stimulus and invest more in the infrastructure sectors and more productive sectors.
Okay.
So, that should be the strategy, and not to take the populist route in the last year.
In the last year, as you yourself rightly pointed out, they have 1.5 years left till 2019 polls. So, if you were to suggest the government any out-of-the-box economic reform that they can look to introduce without, compromising on any transient GDP growth, what would it be?
I think one of the, I won't say economic reform, but it is more about tweaking the reform, the largest reform that we have undertaken on the GST side of it. So, if on that we can bring in the remaining items like the petroleum and real estate in the last year, we can convince the states to get that in. It is not in the hands of the central government only, it is the GST council which has to decide. That is one that for sure they should be looking at, and maybe we have been talking about it a lot, but if they can also introduce some kind of a major simplification on the direct taxes side.
Right, okay. All the talk on growth front, while it makes a lot of sense, but from the common man's perspective, what matters to him on the ground is jobs. So, how do we ensure that in the coming years, as growth picks up momentum, so do jobs?
Right. So, I think there are two aspects where the government is focusing a lot. One is infrastructure, which government has said, and second is Make in India.
Right.
And Make in India is nothing but getting the manufacturing in India.
Right.
It could be companies from outside which manufacture in India. Now, if the focus continues to be on that, and we really push those two hard, then we believe that at least there will be significant number of job additions over the next year, because we have been working on the Make in India efforts for now almost 3 years, and if those pick up, the results of those start trickling down, then we may see more jobs in the next year as the manufacturing starts, the new manufacturing. The investment commitments are there, but it has to be grounded, and the manufacturing has to begin for the jobs to be seen. So, possibly we would see some jobs being created on the Make in India side of it, and infrastructure by its very definition is labor intensive, and that is likely to produce more number of jobs.
Okay. Thank you, sir.
Thank you, Smriti.
Thank you so much. Indian economy is definitely expected to pick up in the coming days, and for that fiscal stimulus is going to be key, as Mr. Ranen Banerjee himself pointed out. What needs to be done is to ensure that this fiscal stimulus is spent in the right direction, so that there is more room for RBI also to cut interest rates and therefore give an impetus to private lending. Thank you. Thank you, sir.